On Friday, we saw a bunch of green on our screens, and that certainly was welcome because we have been in a sea of red through most of the month, but those green numbers really were a nice thing to see on Friday afternoon.
Oh, it certainly was. I mean, the S&P on the week was up almost 6%, as was the NASDAQ and the small cap index. The other thing that was kind of interesting about Friday was that, Bullard, who's basically been a hawk, came out and said that he felt recessionary fears were overblown. And then the other thing that really helped, I thought, was in the consumer sentiment report, we saw that inflationary expectations are not worsening. And that was something Powell talked specifically about on Wednesday.
Yeah, so I don't know that inflation has cracked, but we're seeing a number of areas where perhaps that it did show some peaking. And, of course, the market started to rally, and we had a big number on Friday. But, you talked about up 6% for the week, cutting in half the losses for the month. However, when people look at their portfolios and they're going to get them and in a week or so when the quarter ends, you're going to see a lot of negative numbers. And it's not just on the equity side. It's also on the fixed income side.
Right. The 60-40 portfolio has had its worst quarter since 2008. I mean, both Treasury bonds and stocks are down. Of course, not all fixed income is the same. Different aspects of fixed income have done better than others. But it's been very difficult to make money if you have broadly diversified between stocks and bonds.
And so, you have to ask yourself, when you see these down times, do you look to the other side? And, are there opportunities now presenting themselves in the fixed income market? That's one of the things that you should look at. I know we spent a lot of time talking about the equities, particularly domestic equities. And let me just stay there for a moment. You looked at when the markets have come down, there's the P and there's the E, right? There's the price to the earnings ratio. And earnings right now have not been lowered. And what is happening, Derek, is the price reductions we saw are completely on the multiple side. Please explain that.
Well, essentially, when you talk about a PE, that's the multiple of earnings you're willing to pay. And when we started the year, the S&P was trading at 21 times forward earnings. Now it's trading at roughly 16 times forward earnings.
Which is the long-term average.
Right. And earnings are actually up 8% on a year-on-year basis and are expected to grow roughly 6% in the second quarter. So as I said over and over again for the last several weeks, the stock market is much cheaper now, obviously, than it was at the beginning of the year and is back to a more normal level.
And as we go into the next quarter, the earnings reports will start coming out, and that is really going to be a telltale sign to see how these companies are reporting and what their expectations are of inflation, and does it moderate at all. And as these earnings reports come out, we're going to watch the markets start to react, particularly a name-by-name basis.
Yeah, we felt all along that this year was going to be rocky, particularly in the summer because of the midterm election pattern we've seen in the past. And a lot of companies obviously are going to probably miss expectations. We've seen a lot of negative pre-announcements, more than usual. We've seen some companies reduce guidance. On Thursday afternoon, though, FedEx reported a surprise and issued strong guidance. That's a good sign for the global economy. And we'll see whether Bullard's right that recessionary fears are overblown.
And so there's one more piece I want to get to, and the term is called capitulation. And you hear that a lot. It really means when you've thrown in the towel and the sentiment is so low. We really haven't seen full capitulation, in my opinion, Derek.
No, I mean, you remember the pandemic low, I think it was on March 12th, the VIX got to 85. Well, the VIX hasn't even touched 40 on this sustained bear market. So you would think that option traders would have bought more protection. But thus far, it seems that things have been rather orderly. And oftentimes, I've had so many people in the last couple of weeks say, when do I load up in the truck and buy stocks? And I don't like to hear that, really, because that gives me a level of complacency that perhaps things aren't overdone. It's to the downside enough.